Welcome back to Squawk Box. Just a half an hour till the first opening bell of the third quarter. Joining us right now is Nadia Lovell, Senior U.S. Equity Strategist at UBS. Good morning to you. So we're into the second half here. What are you expecting and what are you doing?
Yeah, we expect the market to remain in an uptrend in the second half of the year. Of course, not to the magnitude that we saw in the first half of the year, the over 14%. But what's really needed to be able to drive this market higher is going to be the earnings season. The fact is that valuation, as we know, is really stretched. As we head into the upcoming earnings season, expectations are high versus the first quarter because the forward estimates has remained quite resilient coming into this quarter. But we do think that, with better economic growth, we're seeing that Atlanta Fed GDP now at 2.2%. And the fact that we've had a pretty robust AI investment cycle, that should be enough for companies to be able to meet those higher expectations.
How much of your thesis is premised on a rate cut in this calendar year?
Our expectations is with 2 rate cuts. However, that does not mean that the market needs that to move higher. The market has already shown that to be the case in the first half of the year. It's really the earnings that's going to drive it. But our expectations is for 2 cuts starting in September. We think that the economy is pointing towards a soft landing when you look at the upward trend in unemployment as well as the initial jobless claims. Of course, core PCE that we got last week was quite encouraging. We're still on that disinflation path. And so we do think that the Fed will have enough data by the time we get to September to be able to start cutting interest rates.
The election, does it have any relevance or bearing on anything you just said?
The election, of course, we're watching it, but we've been advising clients not to make any major shifts in their asset allocation due to the looming election. Of course, we expect volatility to pick up. It typically does every election cycle. We're already seeing a kink in the fixed futures contracts around the November elections. What we're watching for, of course, is the rhetoric around tariffs. We know that former President Trump has proposed a 10% across the board and 60% on imports coming from China. That has implications for companies as well as inflation. It could help some of the sectors that are more exposed to competition for China, but at the same time, it will be a headwind for those with supply chains abroad. We're also, watching for, corporate taxes. We know that President Biden has proposed an increase to the corporate tax rate to the high 20% range. And so that obviously has implications for corporate earnings. So those are the things that we're keeping an eye on, but we're not making any major shifts to our portfolios due to the election.